Hi, good evening, guys. Thanks for your patience. Ken at Tortoise Capital. This is the nightly strategy podcast for September 30th, 2020. Day after the election, the time forgot and the decades could not improve. What a circus that was. I am glad I missed it. The snippets that I started to watch, I honestly couldn't watch more than 10 seconds at a time without nausea. Trump doing everything in his power to lose, apparently. Okay, so let's take a look at the, see what we got here. Okay. Let me try one thing there. All right. So, looking at our last, 30 days of look back. There's our 30-day high up here at 359-ish. That happened 20 days ago. Our 10-day low and 30-day low down here at about 320. And we just notice that every 10 bucks seems like an important price level. There's essentially 360, 350 is the peak of the dragon. 340-ish is that Bollinger Band mean. 330 is Z1. 320 is that 10-day and 30-day low. We made a new 10-day high today, briefly, where we got up to the Bollinger Band. Made a new 10-day high. So this was an encouraging early move that really rewarded the hybrid frogs to the long side. We had talked about that last night, and then there was an afternoon sell-off of a little more than half of the range, pulled back now to close at about, call it 335-ish. We have a daily low here at the skin of the dragon, holding support at 332. Z1 and the spine of the dragon, 330. Belly of the dragon, call that 327.4. That's also the baby dragon. So we've had the RL10 bottom out at 323, baby dragon. So that means one more good day in this winter should become spring, and then we would count that as a significant sell-off, 10 or 11%. Remember, because that's 10.93% from the 30-day high to the 30-day low. So that would make this a winterish move. We just had the P1, which is at RLCO, which is the RL10 crosses the RL30 outside the river. So that's what a P1 tells us. So the other thing P1 tells us is that you had to have a significant adverse price move in order to shock it far enough away from the edge. So there's the Bollinger Band mean. There's Z1. There's Z2, Z1, 0, -1, -2, and basically 3. So you have to have a sharp adverse move in order to get the RL10 far enough out of the river that when it reverses and crosses back over the RL30, that it's actually outside the river. So a P1 tells you, yep, just had a significant adverse move, and you just had a structured move, a corrective move by the RL10, which has bottomed and is moving up, whereas the RL30, you notice, is still sloping downward. We got through the PSAR today, so that was today's PSAR. This will be tomorrow's PSAR at also 332. Now the PSAR hasn't flipped yet because we're basing the PSAR, the parabolic stop and reverse, is off of the RL10 price information and not from pure price. So we actually have to see the pure price trend line, the RL10, that smooth price, has to take out the PSAR. And that should happen tomorrow. And when that flips, the new PSAR is going to be down here by the belly of the RL10 because of math. That's where that PSAR dot's going to be tomorrow, like right on this, where the RL10 belly was. So 323 now becomes the support level. So if this were a swing trade, and now you have, like if you wanted to buy tomorrow's continuation, you could, because the RL10 is going to cross the dragon tomorrow. So we could actually get an SSC entry somewhere in this area tomorrow around, call it 336. And then with a stop down here at 323, that's a $13, and that's about a 4% swing. So you'd be getting an entry about here, and then this would be your risk box, and that works out to about a 4% swing, which is not unreasonable. By the same token, if we had noticed it this way, you get the RLXD here, and the PSAR flips, and it comes from here, and the new PSAR is equal to where the RL10 flips because of math. So that would have given you a swing trade with an initial risk and high stop to the PSAR of this, which would have been about 343 to 355, about $12. And you can see that would have enabled you to enjoy that entire swing move down. So that's what it looks like tomorrow is going to happen, is that PSAR flip is going to occur. Oops. All right, let's see what else we can see. I'm noticing, the 30-day high, the 10-day high, 30 and 10-day low. So we're right on we would be right about 50 on the NDX 30 is about where we'd be, is where this RL10 is. The actual price is here, so that's probably like a 40. So we've retraced half of the sell-off, first leg, and that was really in two chunks. Chunk 1, chunk 2. So that means the next target to the upside, that same size, is a move from Bollinger Band mean to Z1. So call it 347 is the upper price target here. So you might be able to get a hybrid frog off here, and then if it breaks above the Bollinger Band mean, keep a piece for your swing, and then then you're trading from 338 to 347. If we can get back above about 341, this price level, then we are within 5% of that all-time high. And so we would be back kind of into the bullish feeling if we can get above there. Yeah. Yeah, so the PSAR flip tomorrow, 4% trailing stop for swings. And yeah, so now the downside. Let's take a look at that. Let's take a look at the downside. Because we want to frame this in both directions. Okay, so I would say, today's low at about 333 is the first trigger that it wants to go down. Yeah, and so if it does that and closes lower, then it may be that this RL10, which is right here, might actually start to roll over before it ever even gets out of the dragon. And so if we saw this kind of price action, this is where I want to get short, right about here. So that looks like about, call it 329. 329 is where I want to start picking up the short positions. And that's going to be right there at the, essentially, when it breaks out of the dragon, 329, or belly of the dragon is about 328. So either 329 would be a little more aggressive. 328 would be solid on the short side. The second position I want to pick up would be if it breaks below that RL10 belly. So that's 323. So that would be the second position short. And then if it breaks below that 30-day and 10-day low, that's where I would have the third position. Okay. Yeah, that looks good. All right, let's take a look at some trades from today. Okay, so the first one is from Bill and Jeff. This is the automated trading robot that they have where they're studying the SSC in TNA and TZA. So they're just looking at the morning trade, and they're drawing a line in the sand where, yeah, I think like right here is, yeah. They're taking these as part of the study. So trade 1 and trade 2. They're marking off these other trades, but not including them in their results because they're just looking at what happens in the prime time trading of that first move. So they're doing a time series segment on these two trades. And the net today was about 1.84. It gets the SSC right here. So you had the winter sell-off, PSAR flip, RLXD enters with a stop down here, and then they just are following the PSAR, and they take that exit right there for 0.27. The stop and reverse happens here. I think that's a little bit slow because the RL10 actually transitions here. I think what they're doing is they're waiting to see that turns actually from summer into the fall, and that's why the entry was here rather than, I like to get it when it crosses below the VWAP, because this one is already, an entry here is already 1, 2, 3, 4, 4 PSAR dots into the into the transition. It's already flipped and then it's rolling over. But that's a really nice trade and a nice exit. So hard to argue with success. This one, you notice because the summer was so shallow, this one would have been the stop and reverse would have happened. The exit becomes an entry on the short side because summer had already turned to fall. So that would have been a nice trade. That's probably 1.25. If this is 1.5, and this is about 1.25. Now they don't have this one marked off, but this should have been a stop and reverse right here, and then that gives you another 1.5. So there's 3 more in the normal course of events, and then this one I think is slow to exit. I would have liked to try to get here, but that's a fractional and that's a scratch. This is a trade that was missed, and then another scratch. So altogether, the morning session was about 1.8, but there was probably 6 available through this whole normal range of down and then back up. So down and then up. Okay. So that project is still working pretty nicely. They're generating a lot of case studies and insights. Here's one from the Thunder from Down Under. Yeah, he's done a nice job here. Still have to get used to your markup strategy there, Luke. You're making it hard on my aging eyes. Hey, let me know what those red and green dots are supposed to mean. I'm not sure I actually know what those are. I think I could tell from the boxes that this is where your entry was, and that this is where you move your initial risk up to like probably the PSAR and exit, and that you captured from the entry here. I'm sorry, entry here, you captured to this, and then you gave back that much using standard exit management. And you notice that this was also yesterday's high, and it couldn't really break through, and so a 1, 2, 3 exit, instead of waiting for it to come all the way back, grinding to here, that's a really good exit. This is about probably where you want to either here or here. You should be looking at a second entry because it failed to fail, and now it takes out this Z3 like a Z3 pinch, and now it's that bar there is taking out this Z3. So I feel like you got momentum in your hand either there or in here. Gives you a little bit of extra juice on that one. Here was mine in Tesla this morning. So I've got a Tesla swing trade on from 380, and so I've been playing turbo on it whenever I can. There we go. So here's the 4 p.m. closure in here, and it's got a nice tight sideways compression here, and that's basically the size of my minimum manageable risk box as well. All right, so we have a slight gap up from here to here, and it just takes off, and the VWAP is going, and it crosses the RL270. So I just buy it because the market was up pre-market, and everything was green, and Tesla looked strong, so held my nose and bought it. There's my Wu Wei exit. And there's my 1, 2, 3 PSAR dots above the entry. And so on the fourth one, I move that to here. I hold that in place until the Bollinger Band mean picks up, and then it's going to go. And then as this thing moves up, these two little dragon horns up here by Z2 pulls back but starts to move up again. I just feel like, hey, it's given me a signal that it wants to go. So I go ahead and move that stop from the Bollinger Band mean up to here. I wouldn't be offended even if you just said, hey, I'm going to pick the, I want to ratchet this up to like, the southern skin of the dragon would have been acceptable too. But all I did was just lock in this piece, and ended up getting exit up around, later that morning, up around 4:20, almost 4:29. Yeah. So this was just a traditional hybrid frog, and a Z3 pinch breakout, and reinforcing with the second position here in the usual way. And that's what I was saying, Luke, on your earlier trade, that it had a chance to fail back to the Bollinger Band mean. Didn't. It gave me one surge support, second surge crosses the dragon. I just go ahead and buy it, and I'm moving my stop up into here anyway, so I'm not going to lose money on the trade. Now I get two positions working, and so then whenever I have that, especially because I thought today was going to be a volatile day, I'm looking to slide these up as much and lock in pieces as I go. So standard hybrid frog. All right, so this is clean energy. So clean energy is also a turbo trade for me. I'm long PBW because of the core positions. Oops, with the blue arrow. So PBW, clean energy, it's been super strong for the last 4 or 5 months, crushing it in the ETF space. It's got a lot of support in European green initiatives, and is likely to benefit from a Democratic administration. And it's clearly going to be, the way that we rebuild the infrastructure has got to incorporate clean energy. It just makes sense. That's where we regain our world manufacturing chops again, is by leading the way for the rest of the world on producing infrastructure that is energy efficient but also clean power generating. So I think long term that one is a keeper. That and the super big techs. So that's kind of a stylistic or a strategic target for me. So we get the winter becomes spring, becomes summer, gives me this minimum manageable risk box of about 30 cents. It was moving up along with Tesla, and the VWAP is moving up too, you'll notice. So we just buy it, put my regular stop in here, and then it's Bollinger Band mean all the way up. Second position when it takes out the peak of the RL10, just take like basically an accelerated manager exit here. It was failing. It made a lower high here. As it fell through the dragon, I just took the RLXD. Came all the way down to Z1, held support twice. Winter became spring. I got a fraction. Tried the next one, got a fraction. By this time, it starts rolling over. After 1 and 2, there's really not much working, and it seems to be putting in a top right here. And even the RL270 is starting to roll over, and the RL90 has already rolled over, the green line. and the Bollinger Band mean has rolled over. So now I go short with the Z3 breakdown. So that's a Z3 pinch, and short RLXD exit. Try another short here. Take a fractional loss. I missed the stop and reverse. I still was looking at I was waiting to get short in here, and then by the time it got here, it was too late. But by this time, this now looks like a double top. The RL270 has clearly rolled over. The RL90 is starting to flatten out and roll over. So this is a Z1 short here. Stop at the PSAR. I'm just trying to make contact and hit singles. Get runners on base for those of you who play baseball. So that's a nice little chunk. Then this rolls over immediately again, and this is like a collapsing dragon to this belly of the dragon or the RL10. So that's short, and it falls through the Z3, falls through the VWAP. It reversed. I had my stop here at the VWAP in case it didn't, and then I get short a second collapsing dragon when it breaks below here. And then like a 1, 2, 3 exit here. And it was too late in the afternoon to play this other one. I was, caught a little bit by surprise on that one. So all things considered, the other thing I want to show you is the symmetry of the RLFF framework is that you have, this was the maximum excursion of the RL10 from the VWAP. That's as high as they could stretch it. They tried again, they couldn't stretch it any further. And then when this thing collapses through the VWAP, you get this move, and this is a symmetrical move. This is how far they could stretch it above the VWAP, and then it came back to the VWAP. And then this is how far they could stretch it below the VWAP. And I was surprised by that next excursion down, but it does come back a little bit in here. So it was still a little undervalued compared to the VWAP. But what I want to show you is that once this thing can't go up any further and you start estimating where it can go on the downside, I just take the size of that move from the VWAP to the upper limit of the RL10, that maximum value, and then just project that below the VWAP and say, this is a price level that it could get to on the downside. And then that lets you estimate the kinds of moves like on these short positions that you can get, which is, from 62 to 60.7, so $1.30 of downward move. So using the RLFF strategy and the VWAP strategy there to map that out. Okay. Let's take a look at the sectors and see what else happened today. Let's see, where's our treasuries at? Okay, so the S&P up 0.76. Oops, that should be my yellow arrow. So the S&P up 0.76. The Russell up 0.3, so lagging a little bit. Treasuries minus 1%, still above 160. And then down, the diamonds were the strongest at 1.12. Let's take a look at the sectors that were better. So tech and discretionary, not much better than the broad market itself, which was a bit of a concern to me. A little worried about that. I would like to have seen them be the dominant. Instead, what we got was strength from the cyclic ones, the XLB materials, XLF finance, XLV healthcare, emerging markets, Brazil, and oil. So this was a chance. So the strength of the market today was in the the non-traditional ones, the weaker rotating sectors, and we talked about that over the weekend. Yeah. So the idea on that is that when the market has an upward move, SPY, and the real powerhouse engine of this has been XLK. So you got this nice little engine that has been driving this thing up. And yet today you have an up day, but XLK was only as good as the market. So there's no extra boost. The extra boost is not there. But meanwhile, these other sectors like XLB, energy, and finance, which had been weaker than the market, today they have the juice, and all three of them. So XLK was flat compared to the market, but the three beaten down sectors all gave us a burst today, and that's what was pushing the market up. So, I mean, it's like a wagon being pulled by, you got tech, and then you got these other three little things. Sometimes they drag, but today they were in the leadership position. So we'll look to see if that trend happens tomorrow or continues tomorrow. So the companies that did very well today. Let's start at the very top. Nikola, 14%, and then back to reality there's the Bill Ackman Fund recovering his stuff. Tesla strong, Nvidia strong, Goldman, Home Depot, Walmart. There's the triple Qs at 2%. There's the broad tech sector, TECL, was better today at 2.5. Microsoft, Apple, Salesforce. There's the FANGs. So I'm looking for more leadership out of these guys. So Apple and Microsoft that's a good sign. And then when you see finance and Goldman Sachs leading, that's also a good sign. To the downside, so the S&P up 0.76. Then you had clean energy only up 0.15. So it was up more than the market most of the day, but that afternoon sell-off that we just saw really cut the legs out from under that gain. So it only ended up fractionally up for the day. So clean energy 0.15. Wheat and precious basically flat. Energy itself minus 0.3. Japan and oil exploration minus 0.8 and 0.9. Silver 3.8. The companies that didn't do so well, Virgin Galactic minus 6%. Cliff and Devon Energy. So that's a problem when in one sense that those two companies that we like to trade them, were worse than both of their sectors, the energy sector and the material sector. So be looking for some more weakness out of them tomorrow. I'll be prepared for that. Twitter couldn't hang on to its gains. Alcoa, U.S. Steel, Google, Facebook, and Amazon all lagging their sector and lagging the market. Okay. So let's run on over to the daily report and bring this thing home. Okay, so we've already seen the 10-day. And so we're back to bullish. We're still in bullish normal conditions. Let me let that come up on your screen. So, yeah, bullish normal conditions. Now the 10-day and the 3-day are both back up to overbought. So a little nice recovery here. We're about 5% off of the that little sell-off halfway back up the stack. White bullish in percent stretch. A strong, are getting stronger on the ADX at 24.6. Volatility decreasing a little bit there, so the ATR percentage is now back under 2%, so it's at 1.86. The risk Z is still idling along here and saying you can start thinking about your swing trades. We're getting close to a little pop here. The fact that the market initially took the debate in a positive tone, even though it sold off in the afternoon, it still closed a little bit higher than yesterday. So I take that as a positive. I'm cautiously optimistic for tomorrow. So the risk Z is back into really low territory there. That's good. That's essentially the channeling trade right there, when it goes oversold up to overbought. No channeling and overreaction signals. Still got the usual suspects in the max pain. Energy still getting smashed, along with metals and mining. A handful of dojis. 3M is interesting here. He's in channeling. He's 2.3 on the auto framer. It's one of the weaker performers over the last 10 days, down 7.1%. So 3M is postured for some potential. So is Chevron. It had, even though energy was weak, Chevron was a doji. It's 4.5 to 1, and it's underperformed 10 days, 1 month, 3 months, 6 months, 12 months. But today it was in the green. So maybe Chevron is a deep value play. That's how I look at that. And I like that Walmart has nothing else going on except it's one of the 3 companies that broke out on the 10-day NDX. So that's Intel and Amgen finally getting it together, and Walmart. In the ETFs, just a single doji in metals and mining. See real value in XOP. It's been getting crushed, and it's extremely volatile and also very liquid. So that's 3.7 to 1 to the 10-day high, but it also works well to be short. Brazil had a nice day today, but is still 5.4 to 1 to the 10-day high. So the auto framer is strong in this one. The auto framer today was such a narrow range day, and we're still such a good distance away from the 10-day high in a lot of these symbols that you got a lot of favorable reward to risks. Brazil, Chevron, energy. You should be really enjoying that. Only Chevron and Walmart in the little in the 1-day pops, both at 2 to 1. So Chevron and Walmart both going to be on my short list for tomorrow. Dominating in the winter for the MACD 4 seasons. Let me let that come up on your screen. Yeah, so MACD 4 seasons is being dominated by the winter. I like that Apple and Home Depot have turned the corner into the spring, and also Walmart on my short list. I think I've been neglecting Amgen. I think that one probably deserves to be framed. The techs and healthcare have made the turn from winter into spring already, so that's where the early strength is. Had a number of symbols break out of their 3 and 10-day ranges today. There's Amgen again. And the Walmart and Home Depot had a nice day today with a 189 on the 3 NDX. Treasuries got punched in the nose. Europe is definitely lagging, and the globals are lagging. These defensive plays, people unwound some of those positions today. Treasuries, Europe, Asia, those positions got unwound today. And the things people are buying, tech, consumer discretion, healthcare, North America. So that's the way to play for tomorrow's momentum and follow through. Okay. That's everything I wanted to cover for today. A nice, concise 45 minutes. Give you some time to do some trade framing and prep. That's everything I got. I'll get this posted and distributed on Patreon shortly. Okay. So take good care, and we will see